Hello and welcome to Closing Trades right here at ET Now. I think it's Maruti, really, that's where all our attention is. We'll address the market in just a bit, but you can see that gash down coming in for Maruti after its numbers. We just have the PAT performance for you, but just optically speaking, that looks like a big miss at 1,013 crore rupees as opposed to 1,500 thereabouts, what the ET Now poll was penciling in. We were expecting an EBIT margin hit on a sequential basis, higher discount, higher raw material costs, the operating deleverage, as well as the FY24 EPS upgrade driven by benefit of higher yields on its treasury book. But that aside, we will get in our researcher as well to highlight a little bit more as to where this hit could have come in from. Because if you look at the top line figure, it's actually a beat. Yes, EBITDA as well as a miss at 1,912 crore rupees versus the ET Now anticipation of almost 2,200 crore rupees. But yeah, the PAT has definitely, the revenue, I beg your pardon, has definitely come in line. But you know what? Let's bring on board Naveen Kulkarni as well as Mahantesh Sabara too to join in and talk about Maruti's performance. Naveen, hi, afternoon. What explains this big miss? I mean, I'm looking at EBITDA, I'm looking at PAT. It all seems to have missed the street estimates.
Yeah, so I think the miss seems to be primarily on account of the gross margins. The cost of materials has gone up significantly. So I think that is what is explaining, because revenue is in line with our expectations. So that is, I think, pretty much in. Primarily, I can see the significant increase in cost of material both on YOY basis as well as on sequential basis. I think gross margins are a miss, and that's what is essentially causing the miss on the EBITDA numbers.
It does look like it's a problem of the gross margins because the raw material cost has gone up by 43% and the total costs are also looking higher by 43%, and as a result of that the operating profits have dipped. And if you look at the margin figure as well, that will tell you the key picture, because there has been a bit of disappointment on the margin front, and that's the reason the big miss coming on the bottom line as well. The management commentary also says that the performance in this quarter was affected by the shortage of electric components in this quarter, which resulted in about 51,000 vehicles not being produced, and the pending customer orders stand at around 280,000 vehicles at the end of the quarter as well. And they are saying that the increase in commodity prices has adversely impacted the performance as well. But Mahantesh, the question is that, you know, the margin hit was something which the street is factoring in. But from here on, when the commodity prices have cooled off, should we expect this to be the bottom for all of these auto companies and the margin profile being lower, or do you expect that this is going to be the story for the rest of the year as well?
See, I'm a bit surprised when the management is talking about electronic component shortages. We had known that there were chip shortages affecting production, but if the production continues to remain slow, in the sense that the adequate components are not available, the margin performance may herein onwards also continue to remain subdued. So I don't think we will see the bottom. We haven't seen the bottom as yet.
Is it fair to say that it's reflecting in the price, or because recently we have seen, target price to the tune of 10,000 rupees as well on Maruti? Where do you see the stock headed from here on?
It will be very difficult for the company to really perform herein onwards, at least for 2 quarters. The component shortages being one aspect that I already talked of. There is also the other issue in terms of their ability to pass on the huge commodity cost increases that we have seen. That remains quite limited. So unless we find a sharp reduction on the commodity cost side, the performance will continue to remain subdued for 2 more quarters.
All right, let's break it down then and understand the numbers in greater detail. My colleague Somit from the research desk joins in to walk us through Maruti's earnings as well as the commentary and any nitty-gritties that we may have missed. Somit?
Well, firstly, I would point out the fact that it's a big miss coming in on the EBITDA and the net profit front. The company, the analysts were expecting the EBITDA number to come in at close to 2,182 crore rupees, but the actual EBITDA in the first quarter has come in at close to 1,900 crore rupees. Margins have also come in at 7.2% as against the expectations of 8.4%, while on the net profit front, the miss is much bigger of around 500 crore rupees. Analysts were expecting the number to be close to 1,500 crore rupees, but the company has reported a net profit of close to 1,000 crore rupees. Now, why we are seeing such a big fall in the margins? Firstly, it's because of the higher commodity prices, and secondly, also because of the semiconductor shortage that we had seen in the first quarter. Now, the company is saying that because of the shortage of electronic components in the first quarter, they could not produce close to 51,000 vehicles that were already ordered by the customers, and also they said that the pending customer orders stood at close to 2,80,000 crore rupees at the end of the quarter, which is a big number for Maruti Suzuki. Now, in the first quarter, they're also attributing the margin miss to higher commodity prices, and the net profit fall is much bigger, and the miss is much bigger compared to what the analysts were expecting. Also, because the other operating income and other income for Maruti Suzuki in the first quarter was lower because of mark-to-market losses, and that is because of the currency depreciation that we had seen in the first quarter as against the US dollar. So that's what we are currently picking up from the Maruti Suzuki results so far.
Thanks very much, Somit, for breaking it down for us. The stock price, though, of Maruti, that's managing to hold out in the green as we speak. 8,615 is where it's currently at. Mahantesh, with that huge miss on the EBITDA margin front this time around, the high promotional and sales expenses and the margins coming in at about 7.2% versus our street expectations of 8.4%. Do you think that this is going to be a lingering worry for Maruti for some more quarters to come?
Yeah, I definitely think it will be a worry that Maruti will have to overcome. It's not easy. Commodity prices are pretty sharply high. Particularly for an automobile companies, they get affected on the material cost side at all fronts, be it steel, be it on the hydrocarbon side, that is primarily led by crude oil price increases. Moreover, they also have a lot of import content that comes into their cars, both directly as well as indirectly. So all things are stacked up against Maruti for any margin performance improvement to happen quickly. The only way they can possibly improve the margin is raising prices, but that means that they will have to take a hit on the volume front. The volume growth could remain tepid. So that's why I've been reckoning that for 2 more quarters we wouldn't see Maruti surpass the single-digit EBITDA margin at least. That's 2 quarters of single-digit EBITDA margins more to go.
That point is taken. We'll let you go on that note. Mahantesh as well as Naveen, thank you so much for joining us. One important thing to really flag out in the numbers is the other income component. So other income this quarter has come in at 81 crores, and that compares with 508 crores that the company reported last year. So that's the reason you are seeing that big miss when it comes to the bottom line, because if you look at the top line, that's largely in line with expectation. Yes, there has been a miss on the margin front as well, but that doesn't fully explain the miss that we are seeing of around 500 crores on the bottom line. A part of it is actually flowing in from other income, wherein that has come in at 81 crores versus 508 crore last year. So that's about...
I guess, Anisha, sorry to interrupt you there. That's exactly what the market must have understood, which is why after that gap down post the numbers came in, you are seeing a big recovery actually come in for Maruti. If you can just bring up that intraday graph, and now some, sanity is finally settling in. 85.60 thereabouts is where that stock is, and now it explains. It's that other income component, which is why you're seeing such a big miss come in on the PAT. We were trying to dig out what went wrong and why the PAT is off the way it is, and now that explains it. But let's address some other earnings. We have with us Ramani Dathi. He's the CFO at TeamLease.